Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex weekly outlook for the week of November the 21st, 2011. Now, to get started, we're again going to see a very choppy, volatile week ahead with the Eurozone crisis, plus the U.S. debt issue. There's a number of things on the table here, but my respectful opinion, the dollar is going to reign supreme here. Now, looking at the key levels from vantage point, 77.59, 77.94, 78.24 on the US dollar index. The US dollar index, of course, is a way for us to gauge the overall strength of the dollar against a basket of currencies, primarily though the euro. So looking at this, we still have this triple EMA cross in place. It's fresh. We've gone through a period of consolidation. The dollar's made it through that, and we're pushing higher. Predicted MACD, predicted TSI, both supporting further long trades. Predicted short, medium, and long-term differences. A little mixed, but they're above the zero line, and everything still looks good. The main thing is we've had a significant close higher here. If we look at 78.25, that's a pretty strong close here for the dollar. Now, again, the safe haven flows attached to the dollar, a number of different reasons. We had the TIC flows last week. We showed good demand for dollars. So from a technical standpoint, a fundamental standpoint, the dollar's looking pretty strong here. Now, regrettably, this brings me to the equities, which I talked about in last week's Forex Weekly Outlook, where basically I was saying, look, we need to start selling the S&P 500. We do not want to buy this thing up in these levels. Now, the debt crisis that's plagued the U.S. from 2008 onward, which has really caused the U.S. dollar to take a big hit, well, that's coming back now against the euro and all the European countries, and more importantly, the euro currency. This was inevitable. Now, when they talk about this, when the U.S. sneezes, everybody else catches a cold. Well, there's a lot of truth to that statement, and we're seeing it now. We're seeing the Swiss franc weaken. We're seeing the euro weaken. The commodity currencies are now taking a hit, and this is likely to continue, which I'm going to talk more about in this presentation. Now, with the S&P 500, we've closed the week at 1213. I've got a little bit more support down around the 1208 area that could potentially give the equities a little short-term boost, but I see that highly unlikely. Starting the week, I would be looking at selling into this 1233 area, and I would expect a breach of the 1200 mark sooner rather than later. Now, as we come into another factor here is gold. Gold is actually, surprisingly, is weakening. Now, I don't anticipate gold to weaken too much, because when we have this global crisis coming into play yet again, the dollar does reign supreme here for the moment. Now, if the U.S. can't sort out their debt talks and what they're going to do with the super committee, I don't know what it's, maybe somebody can explain to me what a super committee is, but if there is one, the U.S. certainly doesn't have it. But looking at this, gold is taking a short-term hit, but I wouldn't count gold out just yet, even though the technical picture here is setting up for gold to sell off. My opinion is the global fundamentals will trump the technicals in this particular case, and gold will stay above that 1680 mark. Now, I can't be sure of that. Of course, nobody has a magic box here, or a crystal ball that tells us for sure what's going to happen in the future, but I would be very surprised if gold does not push higher off that 1650, 1680 level. Silver is clearly not in the same league as what gold is. I believe that silver will continue to move lower, but gold will move higher after a corrective move. Silver predominantly has been following the equity market, so there's nothing really supporting the silver trade at the present time. Now, this brings me to crude oil. This has just been a terrific sell this week. I talked about this last week in the Forex Weekly Outlook. We do not buy crude oil under the current economic global conditions. Crude oil is clearly, money is not going to move into this. If we look at the financial crisis of 2008, clearly, like I was saying in last week's Forex Weekly Outlook, this short-term boost higher should only be used to set your short positions and get ready for a much much deeper move to the downside. And this is a common sense play. We can look at some of the different websites that have the fancy trend lines and they have this and that, but remember, as strong as the technicals are, fundamentals do have the power to trump those technicals instantly. And that's what I think you will see further with crude oil this week. So even right now, where it's closed the week at 97.41, in my respectful opinion, looking at the global economic situation, it's a terrific sell. But from the technical standpoint, you can see 95.67, the vantage point key level. I believe that'll be taken out by midweek easily. That's my opinion. I could be wrong, but we'll see. But again, we have to look back at these repetitive patterns that whenever a financial crisis starts, crude oil long trade is certainly not somewhere you want to be, because like I said, we went from the $110 or $120 a barrel, and they said that crude oil, most analysts said crude oil was going to $200 a barrel. Well, within a matter of weeks it was below 50. So be very, very cautious there. US 10-year notes, I always like to touch on those. They're holding up. I believe that these Treasury notes will do fairly well. They'll actually follow the dollar in this particular case. Now, again, when we're looking at buying, do we want to buy Treasuries in Europe or these other places, or do we want to buy debt in the U.S. and kind of that safe haven? Right now, it's certainly a place I would be buying it, other than the Eurozone and some of the other places. But it can go either way on that one too. Now, getting into some of our currency pairs, we're going to start with the Aussie US dollar. Key level 102.41. The vantage point, predicted MACD, predicted TSI, crossing the trigger to the downside. We're getting a little bit oversold here, but I think we have room to extend. But the key level is here, as we've closed at just above parity. So any move up towards these upper levels, 101.31 and 102.14, that's an area to set your shorts. Now, again, these currencies go in long trends. The Aussie dollar has really been strong for the last couple of years. I think it's going to, very soon, it will be entering